Ira Epstein with your Spider ETF stock market wrap-up for a pretty active trading day on this Tuesday, and we are at the 4th of October, 2022, getting on to 6:10 in the evening. That's p.m. Central Time. Well, one of the big events of the day, certainly the letter from Elon Musk to Twitter that he is willing to take and complete the sale at the agreed-to price. So you're looking at Twitter all of a sudden 52. Do you remember I told you that I was telling people that I knew to take throwaway money? It has nothing to do with charts. Buy it. And it was about $37 to $39 as we were talking about it. I admit I bought some too. And it was small and it was throwaway money. Believe me, I wouldn't worry about it. It's not going to change or alter my lifestyle. But I said, I think it's going to go back to minimum of 50 because my wife went through this. She's been with Tiffany for many decades. And to make a long story short, I saw her go through it with LVMH, and I said, it's going through. They just try this at the end to make the deal more palatable to the buyer, and they try to get out and they try to do everything. And I can't blame LVMH. It was the pandemic. I don't agree with what Musk did, okay? He bought it. He decided that he didn't even need to do due diligence. Who does that? But he's got the billions to do it, and so he's going to own a great company. There's no downside to this, folks, but Donald Trump should be jumping up and down because very possibly he's going to get back on his Twitter account for the elections. Home Depot up nicely today. We can go through them. Amazon, Apple, everything up big time today. Tomorrow we get the OPEC Plus meeting. It can't be good news for inflation. I don't know why people aren't understanding that. What it's good for is obviously the oil companies, because if they go ahead with a major production cut, and the talk is up to 1 million barrels could be the number, that would be a shocker. That's worth approximately anywhere from $1 a barrel to 50 cents. So I have read reports where it's $1 a barrel. That would be $10. I've read other reports it's 50 cents a barrel for each 100,000 barrels that you would cut. How these ratios come about, how people figure them out, I leave it to them. I'm just telling you what I did. When I look at Goldman Sachs, it's a breakaway. Is it going to leave a breakaway here? I don't know. But you can see how the market just left everything. I was cracking up. One of you guys wrote me on our YouTube page here how you hate Goldman, how they're no good. Okay, that's not important. It was a basing action. That's what got my attention. I had no idea this was going to happen today. Not in your wildest dream. You don't have a trend trade. You have a lower low, higher high. You have a market that's what? When markets are down a lot, where do you hear me often remind you? They're going to go back to the line in the sand, the 18-day average of closes. The market's over the number. Where does it first go back to? It often goes back and stops there. You come down, it comes back up, it decides what to do. Is it going to be every single time? No. Is it going to be a lot? Oh, yeah. Is it going to be a real lot of times that it does that? Oh, yeah. And that's what charting's about. You're playing for what norms are, but you got to know what a norm is, right? That comes in as I try to teach you in my courses, both my full charting course, the Enhanced Bollinger Band, which brings up Thursday. We're going to have the live webinar. So if you want to attend the live webinar, it starts at 12:30 p.m. Central Time. It is on Zoom. I do not record it for you to go back and look at it. It starts 12:30 p.m., but I'll open it about 12:15. How do you get there if you didn't get my invite? See the magic finger? See this finger? Either one. You take it up here, and as I move it across and you take your cursor up there, you're going to see an icon appear. Give it a click and fill out the form. Is that simple enough for everybody? Now, in that form, you're going to get, after you fill it out, you're going to get from us your invite mail. Be sure to check your spam and everything. It's got your codes to get in. Everything's coded. Everything's limited seating. There's a limited size to this. We filled up last time. The way we're going, we're going to fill again. The questions that you want to ask me, there is right in there a paragraph. Look at the link. Click it. It goes right to my website. You ask the questions, and I get them, and I can make up the charts. I appreciate those of you that have already done that. And it helps me to make the SPDR, the ETF, and the stock charts. I have the futures markets. There's only 40 futures markets. There's thousands of ETFs and stocks. I can't possibly have them all ready to go. And if you want me to have these averages and all on, help me to help you. Okay, and remember, it's 20 minutes. It's fast-paced. So, as I view the market, nice rally. It's a bear market rally. Maybe that's a trading bottom. Very possible. But you're into the resistance of the 18-day average there, the 100-day right through here. And as I told you, you've got a setup that's bearish. Now, when you get a bearish setup like that, normally the market will come back down and test these lows at some point. I don't know if it will or won't, but that's the norm. We'll see what happens. When you come over here, you can see how the Bollinger Bands worked. You can see here how momentum. Did you have an embedded reading? Maybe that's what we should look at. Did we have one? So you can see you had one. When did you lose it? This is the third. You lost it today, and the number, for all purposes, went right to the 18-day average and stopped there. Don't you find it magical how the market will go to that number and just stop at it? Netflix, you tell me the number you're building at. It's right here. It's caught in the sideways action of these bands. The trend is certainly to the upside, but it can just as easily, if it gets under 230, 285, turn down, giving you an objective of the lower band. If it goes up, the upper band. When it breaks out, but you don't play that it will break out. You play that it won't break out. Do you understand that? Eventually it does. But if you play that, oh, I've got it this time, you end up getting hurt. That's what I've learned with my chart technique. Okay, in Apple, bear market rally. I love it. What do I got to tell traders? For short sellers, I'm going to tell them to hit the market. I like the 18 and the 100-day average. Bearish crossover, that's the resistance point. Where would I be wrong? I'd be wrong if you get over 154.72 and potential still back into this lower Bollinger Band, wherever that comes in. Disney, finally. Disney loses the embedded reading and doesn't go to the 18-day average all at once. I think it will. In order for it not to, tomorrow you've got to have a big break in Disney and lose that reading where both numbers are under 20. Otherwise, I think you're going to lift up to that combination, but you're out of the downtrend that began with this peak and came all the way down relentless. So if traders were short this, so what? So you get out on a day where it's up 4%, but it's been falling every day. The problem is it's been staying to the left-hand side, of the Bollinger Band. It's not been an easy short sale, if a short sale at all, the way that I teach charting. I would have just walked away. XLF, again, you lose the embedded reading. You go to the 18-day average. Game on. Which way? That becomes the question. To get long up here and put a stop all the way back here at 30.25, I'll let you do that. I don't think it's a great trade. And to count that it's going to keep going up, why? You got the 100-day here. That's another resistance point, a lot of resistance, and you're going to think it's just suddenly turned bullish. I welcome you to do your thing. Take a look at the weekly charts and make a decision if that fits in. In XLI, same thing. Big short covering day today. And you have it market after market. It's not just any one. Here's your Bollinger Bands yesterday. Not Bollinger Band, your slow stochastic. You already have a pattern of higher lows, and you got your higher high setting in. Target, if you rally, is the 18-day average of closes. And the question is, will you get the embedded reading? It does. Why did it just stop there? I don't have the slightest idea, but it's what they seem to do. And I look at it over and over. So I'll get people that'll call me, Ira, what do you do? Or they write me. I get a lot of writing things during the day. And if I have time, I do respond. If I'm busy writing reports, doing whatever, I do run a brokerage company. I know it sounds crazy. I'm very busy. But I will write back and I'll go, hey, it's low-hanging fruit. That's where the traders go to when they go, I got what I need. Now it's got to prove if it can stay up, down, whatever it's going to do. Same thing went on with XSD. Market after market today to the 18-day average. This could continue to the 100. Why not? Could go to the Bollinger Band. Is it a good trade to play for that? I don't think so. You've got a lower low, higher high. This was the easy part of it. Market's correcting an oversold condition, but it's certainly not giving you buy signals the way I define them. I was surprised home builders came alive, but if we think about it, if the market has got this juice going that the Fed's ready to pivot already, well, then the home builders are too cheap. What can I tell you? Do I think that's the case? No, but every market corrects. This market on this day left its downtrend. That's when you broke all these patterns. And it ended up right back here, losing the embedded reading. Let's you and I take a look because this is so darn important. And you started flirting here. Are you going to lose it? You did yesterday, and if you go, you're probably going to the 18-day average, and you cleared it. I'm sorry there. You cleared everything here. Let me fix that. Just like that. So maybe the 200-day average is your next number, but you knew not to be short. Isn't that what trading is about? Having guides for yourself that you believe in. Will every time that guide work? It will not. Nothing works that I've ever seen all the time. Nothing. So you can get away with things doing the wrong thing at the right time and the right thing at the wrong time, But if you're consistent, you're trying to hold your account together. You're trying to understand the idea of what trading is. There's a difference between investing and trading. If you don't get it, learn it. When you're investing, you really don't care that Apple's down to this price in the 152 area or wherever the heck it's at. It's a company you think is going to 2.25 for whatever your reasons of doing it, and it's just a good opportunity. As a trader, I'm looking for short sales. You see the difference? Doesn't mean I don't agree with you down the road. Now's not the time for my mentality. GLD. I told clients, I mentioned it here, I told them to buy at the market yesterday in futures, and I told them to all come out today. You're in the area where this is the low-hanging fruit. Take it. You could hit the Bollinger Band. You can go higher, but you've come up straight up here from 151. You're at the 160 level. So long. You own it. It's not in a trend. It's in a radical bounce, hoping that the dollar will drop, that inflation will still stay there, and the Fed is going to pivot. Hoping. GDX. Fighting its battle there. That's not a trend. That's a vertical price rise in the market. Copper. Party Congress. What? China, October 16th. Big event. You think they're going into that event with the housing market as bad as it is? You think they're not going to do window dressing before all this to give the applause? President Xi's going to get his third term for such a good job he's done during the COVID. He's not going in without some reforms. And one of the likely beneficiaries, and I don't know that I'm right, but it's likely, it's going to be something in infrastructure and the housing to straighten it all up so all the delegates can go home and tell the people how good it is when everybody knows it's not good. But you can't say that, especially if you're one of the American banks with a license there. They have been told to say nothing. You want to keep your license? You are not criticizing the Chinese government. I get it. It's their play lot. It's their rules. We look at it as Americans, but there is their perspective, and this is their pride and joy, this party. Don't ruin the party. I understand it. I get it. When you look at TLT, not even much of a rally. So let me understand, should this market be going up or down? I guess it would be going down if you think interest rates are going higher. But didn't the market today act as though interest rates were going to stop going down? That's the rally. Get what I'm talking about? UUP, the dollar, vertical price drop. Out of nowhere, bang, just let's go. So from 30.76, 29.58. I know it doesn't look like a lot of money, but it is in UUP. These are big moves because it trades at this type of price level. FXE, were we not talking that if it rallies, you get back to the 18-day average, fight a battle? It's right where you're at. So you put it all together, you try to come up with game plans, and that's where we're at for you with the one that you can ask me questions about. And that is going to happen this Thursday in our webinar. What's up? That's what I love to call it. So again, just take your cursor, move it to the top up here anywhere, sign up, come in. I open the gate at 12:15. That's 12:15 Central Time. It starts at 12:30. I end 20 minutes later. It's not going to ruin your workday or anything. The ideal part is you get me the questions you want me to answer before this ever gets going, and we fly with it. Remember, the seating is limited. It does fill, and that means you'll be knocked out. I'm Ira Epstein. Register. Have a good day.